Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. I hope everyone had a good weekend, spent some time away from the charts. Hopefully you got to catch us on Sunday for our top tier outlook video where we talk about the week ahead and the positions that we have and what we'll be managing into this last trading week of October. And also we have a number of jobs releases. So check out that replay and you can see what's on our radar and what we'll be trading, navigating around, maybe even using for our next batch of swings. All right, so speaking of our next batch of swings, right now we continue to be long, looking for those dips to buy. You know, and it kind of reminds me of a couple of things that I was thinking about after the show yesterday, and something I haven't talked about in a long time. There is a certain, it's not an overt thing, but there's a thought out there, especially amongst retail traders, that targets are trades. So for example, if you're in a show like this, or maybe in the Sector Secrets Master Room, or wherever you go, and someone says the ES is going to 6,000, right? Is that a trade? And this is sort of a rhetorical question, but it's not. How many folks would think if someone went on television and said, the S&P is going to 6,000, that's actually a trade? How many folks would further even think they know anything other than they're just guessing it's a big number overhead and it would be a new high, right? There's no prediction in the market. But let's say we are in an uptrend. 6,000 is not a bad number. Let's say we talk about Bitcoin, for example. You know, everyone's asking, where's Bitcoin going? And there's been this big thing of people throw out a major psychological level. I should say throw up a major psychological level. 70,000, right? Bitcoin's going to 70,000. Maybe it is, maybe it isn't. But does anyone think that's a trade? So here's the punchline. It's not. What is a trade? Whether that be the S&P or whether that be Bitcoin, is waiting for price to hit a trigger. What is a trade, gang? And this might sound rudimentary, but you know, when I look at sometimes some of the questions out there and the conversations, I realize there's a lot of folks who have a very misguided idea of what trading is. So what's trading? It's entering something at a level with the probability that it will follow through to a target while the entry is still somewhere you can manage risk from. There's a lot of moving pieces. It's not complicated. It's risk, it's reward, and where is the entry within that chasm? Yes? If you enter really close to reward, your risk is rather large. If you enter closer to where the risk or the validity of the trade is, your reward is, you know, perceivably larger. So in this case, whether that was the 23rd of October or the 25th of October, those were the triggers. And maybe we reached 70,000. I would keep an eye on 69,635 because that's where we stopped before, right? So that's what a trade is. It's not, oh, we're going to 70. That's just someone telling a bedtime story. A trade is, hey, gang, on the 23rd, let's say if it was, we're sinking down into this gray area, which is a volatility zone. If the same thing were happening with the S&P, with this notion that, hey, we could go to 5950 or we could go to 6,000, whatever the next number they're going to throw it on television is going to be. I promise you, someone's going to start throwing 6,000 out there if they haven't yet, because I don't watch that stuff. But let's say they do, right? Okay, cool. That could be a level. However, before we get there, 59, call it 25, is where we've had resistance. That was actually a level, that high was actually 59.27 and a quarter. Well, the seller showed up there before. Maybe they'll show up there again. Maybe I should at least do some risk management or profit target consideration at that level. It is an obstacle, right? Okay, that's one level. Where could we go? But where do we get in to get where we want to go? So take a look. October 23, we hit the gray zone. October 25, we hit the gray zone, which means the entry zone that we are looking at for whatever that target may be. Maybe it's something reasonable like, okay, Rag, I agree. There was resistance here before. Maybe you're listening to someone on television whose job it is to throw some crazy number out there. It may not be that crazy, but on the way to that level, we got to get through this resistance first. That means I'm looking for support like this, or like this, or like this. So I have a Darvis support here, and I have the volatility zone support levels in here. That's trading. 6,000, that's television. Big difference, right? So when folks say, Rog, what do you think about two questions that came to mind? And I appreciate the question, but I'm also really disheartened by them. Rog, what do you think of SPX this week? That was one I don't remember. And I would even say whoever it was a well-meaning question, but does anyone actually think that someone on a Sunday evening or even a Monday morning knows where the S&P is going this week? And the person who's willing to answer that question, I actually will go so far as to say that is absolutely an unanswerable question. And to do so is bordering on delusion. Would I think there's a probability of it moving higher? Absolutely. I'm long financial stocks. I wish I was long some more. I'm long some financials because financials are a strong part of the S&P right now. I'm long Cisco because Cisco is one of the longer, stronger. It's been a really good trade for us this month. I want to get into it again. It's a strong name in the NASDAQ. There's a probability that it will go up, right? Somebody asked me about Tesla through the end of the year. Really? And these are the kinds of things that get traders into trouble, right? So where would Tesla has a resistance level to contend with at 271, call it 20, right? Let's see what happens there. Let's see if it can form a trend, because if structure dictates strategy, who here thinks that throughout November and throughout December, we might see different structures? We might see a trend organized, we might see a trend unorganized, whatever it may be. Nobody knows that far in advance unless you're just looking at an uptrend and saying, hey, it's most probable that a body in motion stays in motion, right? That's physics 101, and it does apply. So yeah, I was thinking, gosh, I haven't talked about this in a while. And it's that kind of mindset that's hurting traders. It's a mindset of getting into a room, any of the rooms here at Simpler, and saying, hey, what do you think XYZ is going to do today? That's not a question. And whoever answers that should say, that's actually not a helpful question to ask. It's really not. What time frame are you looking at? What time horizon are you looking at? And I say these things not to make anyone feel bad, but I say these things because someone's got to say it. Someone's got to say, hey, if you really want to make a go at trading, just ask a better quality question. So now we say, okay, Rog, I want to be a day trader. Great. Now it's a 5-minute time frame discussion for me. Rog, I'm thinking about what could happen maybe this week, and if I could find a trend to take advantage of for the next couple of days. Could I find that? Yeah, now we'll go to the 1-hour time frame. Rog, I've got a longer term view on this chart. I want to put it in my portfolio. It's a buy and hold for me. Great. Now we'll go to the weekly time frame, because the time frame will in many ways influence, probably the most significant way, time frame and trend will influence the time horizon. So what's the interval your chart setting is, and then conceivably how long could the trade follow through, right? So that's why in equal breath, I'll say, when folks look at a weekly time frame and are talking about a trade that could happen today or tomorrow, that's absolute nonsense. It's not a time frame, time horizon sync. So there's a lot of value there to understand which time frame maps to a certain time horizon. And these are basic things. These are really basic things that I was lucky enough to have a mentor tell me, and I'm just trying to pass it on, because unless we start thinking about what it is we're doing within these constructs, we're never going to win. Where is something going is not a trading discussion, right? Can something reach a certain target is not a trading discussion. Can I manage risk from this entry where the probability is for higher follow through? And that's all we ever do. So if I'm talking about Cisco, let's talk my book, right? Which is what we usually do here anyways. Cisco's moving higher. A body in motion tends to stay in motion unless there's something in the way, like maybe earnings. So if I can find a support level from which to manage risk from, it doesn't mean that we're going to succeed. It just means there's a higher probability that lows will be bought. And if it's a trend, there's a higher probability that as we reach new highs, buyers will be willing to punch through that. It's just a probability, right? So that's one thing. I mentioned yesterday in Top Tier Outlook, there were a number of things we could have gone shopping for as they pull back. The S&P was definitely one of them. So keep in mind as we go through the remainder of this week, we've got the end of the month. We've got JOLTS tomorrow. We've got non-farm payroll on Friday, which is November 1. And we got candy to hand out on Thursday evening. All right, so let's see what else we've got going on here. Gold is another position that I've really, really found the trend is very strong in, and I want to continue to take advantage of that trend. By the way, gang, another question that I get, and it's unanswerable for me, because it should already be something we're looking at, and that is what's going to happen after the election. Again, anything that presumes prediction, fortune telling, needing a flux capacitor in your DeLorean, these are not trading questions, right? What I can say is, however any different group of traders are thinking about the outcome of the election, and I don't just mean the White House, a lot of things that are going to be in play next week. Gosh, next week, can you believe that? Unbelievable. So there's a lot of things that are going to be in play. If someone out there is moving around some money, moving around some size, and they like a particular sector, right, for whomever, and they're making a little bit of a guessing game too, right? They're making a bet on who might be whatever, fill in the blank. Those sectors, those stocks, those commodities should already be moving, because discounting is the act of putting on a trade with the expectation of a certain outcome. So it's not as if the trade's going to be put on the day of the election or the day after. It's on now. It's being discounted. It's being expected. It's being priced in, baked into the cake. So if you're looking for things like that, probably one of the easiest ways to do it is take a look at the U.S. sectors, take a look at the U.S. industries, and see what's moving higher in this environment. See what's getting a little bit of a boost, because that, and then go match that up with some inflows. And then you'll see, oh, okay, there are certain, or maybe there's so much uncertainty, there's not a lot of that right now. One thing that's kind of interesting is how TAN, that's a solar sector, suddenly started moving higher as we get closer and closer to the election. Airlines have been a little bit stronger. Again, it may have nothing to do with the election, but it's a matter of movement with proximity to a certain event, right? That's the way we want to think about it. Excuse me. Okay, so let's see what else we have here. Am I looking for a breakout on EA, or is there a breakout on EA? Lewis, so let's take a look at EA. It's not one of the, so this is where let's go upstream a little bit on EA. It's part of the XLC. So even before I ask whether or not there's going to be a breakout, I want to ask myself, of all the things that I could look at, is it at least one of the top names? It actually is. It's on a trend like TMUS, Comcast, Disney, or Netflix, but actually the next row down of things I might consider, bullish momentum, EA could be interesting. Whether or not it breaks out is never thought number one. Thought number one is, what's the range that we're in right now? Thought number two is, what zone within this range would I buy calls within? Thought number three is, where's my target? That does not need a breakout. And then after that, the second target would be, what would happen if it broke out? I never look at a range presuming a breakout. I always think about, what if we're just stuck in this range? Can I manage risk? Can I pay myself within the confines of what has continued to happen? Never presuming it's going to do something new just because I'm in the trade. That's the way I would look at EA. All right. All right. Next up is, let's go take a look. Actually, let's crack open XLC again. And Jess, yeah, if you're in the mastery, we have all that stuff explained there as far as what I typically do. Does T2 exit become my new break even stop? No, it depends on where we are within the context of the trade. Okay. All right. So let's jump back into XLC for a moment. And Alan's question. So you might be saying, okay, Rog, why would EA be behind Comcast, Netflix, and TM, and frankly, XLC itself? Why would it be behind that? And I would say mainly because those four have trends. Those four stocks and the ETF, these three stocks and the ETF have trends. And trends have a far more probable follow through to the upside. And when there's a day after, say, a sell-off, it does tend to attract more buyers. So it's really, does the underlying structure, does the underlying trend, that behavior, tend to give us a little bit more predictability? Now, the next best might be EA. It's got bullish momentum. It's got this resistance and support. And we talked about how I would want to look for a way to get in where I could presume it stays stuck. None of my trading ever starts with the first target requiring a breakout and therefore higher highs, right? None of my trading will do that. And that's what EA as a breakout entry would require. But EA as a range-bound entry would not require that. And I would be largely bullish in something like that. All right, so that's kind of what I see here today in terms of what's happening on the charts. And I think I'm going to wrap it up here, gang. I'm going to hop on over into the Sector Secrets Mastery. If you want to check out what we're doing over there, it's at sectorsecrets.com. Everything that we focus on is about how do you manage risk? How do you position size in a way to manage risk? And these are things unique to what we do in the room. How do you manage risk? How do you position size to manage risk? And how do you find targets that allow you to take advantage of trends? I mean, the first thing is finding things with a likelihood of follow through. Keep that in mind, gang. And I'll see you tomorrow, same time, same station.